Thank you for turning into the All Funds Network. My name is Mike Schroeder. Today we're here with Earl Yaokasin, CFA. Earl is the founder of Wealth Arch Investment Securities. So Earl blends the timeless principles of Warren Buffett with modern behavioral finance to help his clients achieve financial independence. A lot to unpack there today, but Earl, it's a pleasure to have you on the podcast.
Well, thank you, Mike. It's an honor to be on your show.
Thank you so much. Let's start today. We're going to dig into a lot of what you're working on. We're gonna be talking about some of the stocks that you like, some of the learning lessons you've had along the way. But maybe let's just start with your background. Kind of give us the brief of kind of how you got to where you're at today.
That sounds great. Yeah, I hope this story would inspire and hopefully let your listeners know how I got to where I am. So I was born and raised in the Philippines, and ever since I was young, I was entrepreneurial. My focus was trying to make as much money as I can, save as much money as I can. So as young as when I was in first grade, I would go around the school, I would look for soda bottles and turn them in for the recycling credit. And if I get like about 5 or 10 of those, I could buy myself 1 or 2 delicious Filipino barbecue pork skewers. And then in second grade, I would sell things such as snappable bracelets with all different colors, patterns, and sizes and things. And as I grew older, I sold CDs, cell phones, concert tickets, and even went door to door for fireworks. And I was always good at math and one day and games as well. And one day I turned on the CNBC channel when I was a sophomore in college, and I saw these things going up and down. And I figured, I think I can do this. This is something that I can crack the code on. And if I can make a lot of money on it. And that began my lifelong journey towards trying to become a better investor. And in the Philippines, the stock market is manipulated. It's more about who you know rather than what you know that can get you ahead of the game. So in 2001, I migrated over here to the US. And when I started, nobody would recognize my school or my degree. So arguably, I graduated from the best business school in the Philippines. On my senior year, I was on the dean's list, getting second honors on both first and second semester. But I had to start from the bottom. And my first job, believe it or not, is I worked as a data entry clerk at a Nordstrom warehouse. And I worked for minimum wage. And you can imagine that was like as boring as hell. But what I did was I turned it into a game. I love games. So I figured, to pass the time, to make myself not miserable, I'm just going to make a mind shift and pretend that I have a score at the end of the day, and every day I'm trying to beat that score. And in just a couple of weeks, I was outperforming people who were 10 years on the job, and people were saying, "Who is this kid?" And then, but minimum wage wouldn't allow me to make ends meet. I needed to make sure that the money I'm spending for my rent and groceries and gas would be more than enough to cover. My income would be enough to cover that. And so I moved to working at an appraisal firm in Pomona. I lived in Rancho Cucamonga, and Pomona is about 30 minutes away during the daytime, but that wasn't enough. Working in a real estate firm as a coordinator for appraisers. And then at nighttime, I worked for Bank of America as a credit card collector. So with those 2 jobs, now I had enough to make ends meet, but I had to live like a caveman. For lunch, I would eat 1/2 of a $5 Subway footlong. And then for dinner, I would eat the other half, almost day in, day out. Probably the variety I had was getting something off the dollar menu of Wendy's. So obviously that's not going to cut it at some point. And I was driving about 1.5 hours one way every day because my second job at Bank of America was in Pasadena. So that was, you can imagine, like just absolutely grueling and a lot of hard work.
Brutal.
But eventually I was able to find a job at American Express Financial Advisors. And to my surprise, when I got there, is that financial advisors in the US are mostly just salespeople. They're not trained. Nobody teaches them about investing. They don't really care about investing either. They just want to sell. So mostly they're just
So what,
salespeople.
like selling like insurance, life insurance or something?
Yes, life insurance, annuity, financial plans, and yeah, nobody's training. Nobody in the corporate office is training them. And being new to the country, I didn't know many people, and so there were quotas. And I sales, even though I was selling a lot of stuff in the Philippines, my trick was actually hiring people, like finding people under to sell for me. So I was kind of like managing people more than selling myself. So, but yeah, being kind of new to the country, not knowing many people, it was very difficult for me to reach those quotas. And so I moved on to Bank of America Investments, which is now Merrill Lynch. And I supported the top two financial advisors in the Inland Empire region here. And their focus was on bonds. And my passion has always been in stocks. And after a year or two, they saw something in me and they trusted me to handle the stock portions of our clients. And our portfolios outperform the in-house portfolio that Bank of America Investments was managing at that time. I finished my level 1 for the CFA, and then I moved to the Capital Group in 2007. And in 2007, the long commutes didn't stop. I lived in West Covina, and I initially worked at the West Los Angeles branch. And many times, one way, the drive would be 2 hours. So definitely continued hard work. And while I was commuting, I would listen to a lot of the review materials on my CD player back then in the car for level 2 and level 3, just to make sure that the time wasn't wasted. But eventually I was entrusted at the Capital Group to be the solely kind of like liaison between the operations team and the investment management team. So I was on every conference call. I was communicating with managers and analysts. I would read all the reports, translate that for the operations team so that if we, for example, get $1 billion a deposit in one of our funds, then our operations team would know what stocks to buy and sell. So that I carved that role for myself. At the Capital Group, my personal portfolio, while I was there for 7.5 years, my personal portfolio outperformed any of the managers and analysts that I work with. And we can get into specifics if you want later. And because I did such a good job, I was able to later on transition to starting my own company and convince people to invest in me. So that's how I got started, Mike.
Yeah. Thank you so much for the walkthrough. I guess we definitely want to get into all the stocks and everything, but just out of curiosity, talk to us about that transition when you're coming over from like the Philippines to the US back in the early 2000s. What was that like for you?
It has always been my dream since I was a sophomore in college. So it took about 3 to 4 years before I made that leap. So
what inspired it?
It's just understanding that the US is the investment capital of the world and that the Philippines, there's no future for me there as an investment analyst. I think to be successful in stocks in the Philippines, you need to be kind of like very good at socializing, having connections, things like that. You don't use your brain, but you use your social skills. So that's why I wanted to come to the US. And I was saving I'm Chinese, so I would save a lot of the gifts that I get from uncles, aunts, and during Christmas and birthdays that they gave me in this red envelopes. I would save a lot of the money that I earned from selling various things. And once I had enough to at least survive for a year without any income at all in the US, then I decided to make that leap.
That's awesome. That's inspirational. It's was it kind of tough for you coming into the US initially?
Yeah, absolutely. I was being young, I was foolishly confident, but that actually helped. And I always believed in myself. I always believed that I can make it. And in fact, before I left, I had family and friends and even my parents. They thought I would fail. All of them did. They thought I would go back to the Philippines with my tail hanging, low and just go back in shame. But there was a lot of fuel in the fire, and I was determined that no matter what, I am going to make this happen. And so I would apply to a lot of different companies just to get that first job at Nordstrom, and then continuing just the resume thing and willing to work and drive, for 16 hours a day for a very long time. I was never one bit hesitant to just continue pounding the table. And in fact, when I was driving, sometimes I would fall asleep on the freeway just because I'm just dead tired, and I had to sing like super loud in the car just so that I wouldn't fall asleep. But day in, day out, I would just keep working hard. I just believed in myself, and that belief paid off. Despite that, employers here don't recognize the school that I graduated from, don't care about whether I got second honors on my senior year. They don't care. But I worked from the bottom, so I definitely didn't mind doing that.
Yeah. Well, it's yeah, I love it. It's definitely an inspirational story. With now kind of coming back to, post Bank of America, you start your own firm. Talk to us about kind of just like the start. So you get off, you leave your role at Bank of America after, putting up good numbers for multiple years. Kind of how'd you start? Was it just starting with your own capital trading? Did you start with the fund right away?
Yeah. So just a slight correction. I actually was
Or
at the Capital Group.
SMAs?
Yeah,
Yeah.
I was at the Capital Group before I started my own company. And before I started my own company, my goal was actually to become an investment analyst and a portfolio manager at the Capital Group. But when I was interviewing for a research position in the firm, so I turned in a research report of American Express. And at that time, it was about, I would say, 2009, 2010 approximately. So I've been at the firm 2-3 years. And American Express at that time was trading in, I think, the low 30s. And I wrote up a report, super detailed. It was like 10 pages or something like that. And the hiring manager, when I was interviewing, the person didn't read a single word of the report. He just looked at the report. It had no graphs. It had no tables. And he didn't read it. But you know what? American Express tripled in 3 years after I turned in that report. And so I said, this is like BS. And so I decided to start my own firm. And they, at that time, so it took
He still
me,
hired you though, right?
I'm sorry.
He still hired you though, right?
No, he did not, because he didn't read a single word of the report. He said that next time, because he said next time you apply, make sure you add graphs and charts. But I didn't bother applying. I said that, this is BS. And I decided from then on, instead of trying to move up in the company, I'm going to start my own company. So what I did for 3-4 years was to save up as much money as I can. And then when I had enough money to survive, similar to when I started in 01, when I have enough money to survive for many years, even with 0 clients, then I decided to start my own firm. So that's an important advice that I would say to any person who is transitioning from a corporate job to starting their own business, is that you don't want to take a big leap without any kind of safety net, because if not, you're going to be so stressed and the chances that you succeed are going to be very low. And then you'd have to go back in shame and go back to taking another corporate job if it doesn't work out. So I wanted to make sure that I had 3+ years, and I did have even more than that. Actually, I had about close to 5 to 10 years. Even if I had 0 clients, I would survive. And that gave me a lot of stress relief in terms of just making that transition. I knew I could take my time. I could build my company the way I want. And even if I have 0 clients, I'll be fine.
Yeah, 100%. And now, So you start off. I assume you're just trading your own capital. Do you
Yes.
immediately start looking for clients, or kind of how do you go about that?
When I was at the Capital Group, I wasn't in a client facing role. I was, behind the scenes and just working with portfolios and analysts and managers. So there was no conflict of interest in what I was trying to do, which was trying to line up friends and family first to tell them, hey, in my plan is to, in a few years, back then in 2010, I would say maybe in 4 years or so, I would start my own company. Would you invest with me? And then every year, I would kind of just renew that conversation. I'm getting closer to starting my own company. Would you still be willing to invest with me? And so when I did launch my company in mid 2014, I did have a few clients ready to sign up. They didn't sign up like immediately, but within 3 months, I did have a few clients already. So I didn't completely start from zero, even though I was planning for zero, because sometimes you never know. People just say one thing, but when it comes to money, people act differently. But I was lucky enough that they trusted me to manage their money at the beginning.
Yeah. And then why did you choose to go the separately managed accounts? Just for those that are listening, why did you choose to use the separately managed accounts as opposed to a fund structure?
Yeah, good question. So when I was working at the Capital Group, I was working with both SMAs and the fund structure. When you have a fund, if you have new clients and they add money to the fund, what normally happens is that they would get a proportion of whatever you already have invested. And I didn't like that approach because many times, especially in a bull market, like for example, right now, if someone were to start a new account in a fund, they would be automatically invested in overvalued stocks in the portfolio. And not only that, it would be a larger proportion of their account because those are the stocks that have gone up. But in an SMA, I have complete control as to what goes into that new client's account. So, as an example, in 2001, Netflix was trading. And by the way, none of this is financial advice. This is just for illustration purposes. And any kind of stock discussion that I do, please consult an advisor. And all investments that I talk about has risk, and you could lose money. So with that said, so in 2001, for example, I never touched Netflix in my life, and it was trading at $700 before the stock split recently. It went down to 222 to 200 and 170 where I was buying, and then it went up to as high as 1,300 something early this year with the Warner Brothers Discovery acquisition, which we can talk about later. It's down to 900. I haven't sold a single share of it. And if, for example, I had new clients, right, and I had a fund structure and they started early in the year, and I was telling people that Netflix was overvalued. So at 1,300, even at 900 something in recent client meetings, I would say Netflix is overvalued. So for my clients who just started late this year, I bought 0 shares of Netflix for them. Now, had I had a fund structure, they would have technically owned Netflix at 1,300, purchased Netflix at 1,300 or somewhere there, and they'd be down significantly. So that is the advantage of having separately managed accounts, which is that.
Actually, I want to pick that apart a little bit. So with that, so that it's interesting to think about. So because I would maybe a naive assumption, but I would just think that you're running portfolio, you have whatever 10 stocks that, hey, this is like my allocation. And now, I have a new investor. I'll use Skylar's name. Skylar's coming in as a new investor. He gets these 10 stocks, but you're saying that you will look at this differently. Maybe go just give him 8 of the stocks, or,
yes,
kind of.
That is correct.
That? Yeah.
So every client's account is extremely customized. So that is one of the big differences in my firm versus other large firms. In other large firms, people treat categories of clients the same. They will have the same holdings. And when I was working for the Capital Group, that was one of the things that I didn't agree of how the portfolios were administered, the separate accounts, is that every account would have almost similar positions. Whereas, for example, because Netflix went up so large for me and my older clients, it would be somewhere between 15 to 20%, depending on the time period. But new clients would have zero. So you can imagine that there's a big difference between each client's account. But that's extra work. And that's why nobody wants to do it. But I care so much about each and every one of my clients that I don't mind doing all this extra work to make sure that I can get them the best risk adjusted reward possible.
That's great. We were talking on the we had a call before this a couple weeks ago, but you talked about a couple different things that you do for your investors, and I think that's kind of something that's interesting to highlight. Maybe talk to us about what are some of the ways that you try to add value to your LPs or those that are working with you.
Yes, there are several unique things with my firm, and the top three are: one, I would write extremely detailed investment updates to my clients that are extremely timely, usually within 24 hours of the event. And I'll go into that a little bit later. The second thing that's unique is that 100% of my net worth outside of my emergency fund and opportunity fund is invested the same way as my clients. And then the third thing that's really unique, and I only know of one other firm that does this, is that I put my money where my mouth is. And if anybody is unsatisfied for whatever reason, I will refund their investment management fee back. And nobody has ever requested that. But going back to the first one, so Mike, thank you for subscribing to the complimentary 30-day newsletter.
Of course.
And you just signed up actually maybe an hour or two ago, something like that. And within minutes of you signing up, you actually saw one of my investment updates. And this is one of the shorter, slightly less in-depth updates that you're going to receive. But as you have read, it's already pretty in-depth and it's very timely. We can go into the specifics if you'd like, but I go into an event that happened to one of our investments. Something has changed. I break down all the numbers for my clients and detail what that means. And then I conclude with what do I think and what do I plan to do.
100%. So for those listening, you'd sent me an email that was like, you recently invested in, some stock that's out there. So every time that you make one of these investments, you email your investors this update, correct?
Yeah, that's correct. So anytime I buy or sell something, usually within the hour, all my clients know what I just did and why I did it. And if it was a new investment, it'd be pretty lengthy and really detailed. It'll break down, this is what I like, these are the risks I see, this is my valuation, and what do I expect going forward. So it's pretty detailed like that. And then the other thing, the one that you received, was when an event happens, I will write about it and I'll give you my detailed thoughts on a specific event. And then the other type of update that I would also write about is usually within 24 hours of an investment reporting earnings, which you will get one of these reports in the near future. I will write up. I will first read the financial statements, listen to the earnings call, make my own analysis, and then I will usually send that within 24 hours of the event. And that way, clients know exactly what has changed. Did I change my valuation? Did I change my rating? Did I change my plans of what I wanted to do? And then the final thing is that, for example, I would write macro related updates. So for example, in April, the tariffs were announced. So I went line by line, investment by investment, in detail, how the tariff policy could potentially impact each of our investments. So I write a lot, and that's extremely unique compared to where the average mutual fund, they would write a quarterly letter, and sometimes it's a semi-annual letter. In some cases, it's even an annual letter. But some mutual fund managers, they write a quarterly letter. It's like a small paragraph about a few of their holdings, and that's it. I write about one investment in detail, many times in a quarter.
100%. The how do your investors like react? I assume your investors like to get these updates.
For the most part, yes. So my clients have come from all different backgrounds, but some are not sophisticated financial, investors.
Some don't care.
Some don't care.
But others you
But
get good
others
feedback.
they love it. They read every single report that I put out, and this is one of the reasons why during COVID in 2020, I only got one phone call, one, and that's because people read what I write, and there's no need to call me because they know exactly what I'm thinking, what I'm doing. And by the way, I was buying, some good stocks at that time, so they knew, but only one person called.
Yeah. Tell us about your research process. So, it sounds like you're very in depth. Kind of how do you spend your time? It sounds like you listen to a lot of earnings reports. Are you reading a lot of articles? Kind of, give us the full like day to day.
Yeah. So the first thing in the morning is I check for news. So I look at, obviously, pricing tells you, is there something going on? If a stock moves a decent amount, that means something happened. just like my report today, or for example, we talked about Netflix. So on, I think it was maybe a week and a half ago or something, on a Friday, when I woke up, Netflix was down, a good amount, and then the reason why, it was official that they are acquiring Warner Brothers Discovery. So the first thing I do is I just scar through. I need to scar through the news so I can plan my day. Once I know what I need to research for the day, then I'm on to it. So for example, on that Netflix day, after I went through all the news and looked through all the stocks and figured out, am I buying, am I selling? And if the answer is no, then I would go on to researching. So the first thing I did was to look at all the articles about it, look at different viewpoints, and then I reviewed the press release, and then I listened to management's conference call, and then after that, I started working on my own quantitative projections, looking at whether the management is optimistic. So as an example, the CFO of Netflix, Spence, he mentioned that the deal will be accretive in 2 years. So I just don't take what management says at face value. I would come up with my own calculations and figure out, is this realistic or not? And the answer to for example, that Netflix situation is that is not realistic. The acquisition for Warner Brothers is not, in my opinion, going to be accretive in 2 years, because the projections are for 2.5 billion pre-tax of cost synergies, and it's only going to be in year 3 that they realize the brunt of it. The additional thing is that they didn't talk about revenue synergy, so I had to come up with my own calculations myself. So, for example, I have to make an estimate as to how much subscribers does HBO have, how much subscribers Netflix has, and then how much can Netflix cross-sell HBO subscribers to their platform, and vice versa, and all that. So I have to come up with my own revenue kind of like scenarios, revenue synergy scenarios, and then how realistic is that? How soon can they potentially achieve those? And then I look at Warner Brothers financial statements and look at their projected earnings in the next several years as well. So looking at that, in a little bit more detail. So that was pretty much what I was doing all of Friday. Was all just Netflix. So that's kind of what what my day looks like for the most part, is reading and thinking.
Got it. Very cool. What what are some of the stocks that you're investing in right now? What are you excited about?
Yeah. So interestingly, the stock that I emailed you, I do rate it a buy. I'm pretty excited about that, but I do have higher conviction in other companies. But yeah, you are showing one of them. So
Yeah.
we will talk about Vital Farms. So Vital Farms is the company that I wrote about today. And as I mentioned in my report, because my clients are not all, I have some new clients. So I just wanted to reiterate for everybody that I purchased most or all of our position in October of 23 at $10.80. And obviously, it's, about tripled at current prices. And it closed at 32.20, not including, whatever after hours action that you're seeing on screen right now. What changed today? The stock was down 6.75% today. And the reason it's down is that management lowered revenue guidance for the fiscal year slightly from a growth of about 28% to about 25%. And the reason they lowered that growth, that there was an enterprise risk procedure that or transition that they had to overcome this quarter. It's a one-time thing, and that kind of lowered revenues for this quarter. But the good news is that next year's projections for revenues are quite robust. So from 700 something million in revenues for fiscal year 25, it's going to actually go to 930 to 950 million. So that's about a 20 something percent increase year over year, which is really strong.
For sure.
And their initial target was actually to hit $1 billion in fiscal year 27. So if they're already hitting 900 million in fiscal year 26, 1 billion in 27 is most likely going to be a cinch. And now they've increased their outlook to, they think they can achieve $2 billion by fiscal year 30. And from, for example, this year, like I said, approximately 700 something to 2 billion, it's slightly under a triple in growth for revenues. So if revenue growth will triple and the company's margins are one of the best in the food industry, the stock should rise significantly over the next 5 years. And why is this 2 billion revenue target realistic? So one, they've already proven that they just initially surpassed their previous guidance of FY27, and it's going to be a cinch, and they're definitely on track. But number two, a lot of facilities are going to come online in about fiscal year 27/28, where they're going to increase factory production and supply, and that's going to create the capability to sell more products to the market. And so if for anyone who doesn't know, Vital Farms is a premium egg producer. If you go to Whole Foods or you go to Target or Vaughn's or Ralph's, whatever supermarket you're at, they are usually the most expensive egg on that on their section. And the reason why they priced their eggs so high is that the quality of the egg is top notch, and that is a result of how they raise their chickens. So most
now with
producers,
I guess with these stocks, is this one of your favorite? Because we don't need to dwell on this one too much.
Oh, okay.
Do you have others that you like?
Yeah. I have one that's a higher favorite, but this one will do well. So, but I think there's one that will do even better. So the stock right now that is my favorite, the ticker symbol is FOUR.
Shift4?
Shift4. Okay. So for people who don't know, Shift4 is a payment processor. And what I like about payment processors is that as long as you are not losing clients and your revenues and profits over time will likely increase because of inflation, because the company gets a cut as to the payment financial transactions that are going through their network. And Shift4 actually has the #1 market share in the US for sporting event stuff. They have the #1 market share in hotels, and they have the #2 market share in restaurants, only behind Toast. And for example, for the sporting event stuff, and you're a sports guy, Mike, so you can appreciate this. So in Major League Baseball, they have acquired more than half of the teams as their clients. That includes the Yankees, the Red Sox, and the Dodgers. I don't know about the Chicago teams, Mike, but sorry, I don't know that part. But we know at least, the three big teams are working with them. And for example, in the NHL, they
It's
recently,
like a payment processor. Like,
yeah, it's for the
can
whole
you talk about
stadium.
like yeah, okay. So it's like I don't know, replaces like I don't know, Clover, stuff like that.
Yeah, exactly. Yeah. And the
Mhm.
difference between Clover and Shift 4 is that Shift 4 is much more robust in terms of its user interface, in terms of its data capabilities of being able to calculate provide real-time statistics to the company saying, oh, how many fries are being bought this second, and something like that. So
Okay, yeah.
so so people can adjust and let's say go to the store, go to a grocery store or another or their supplier if they're running out of salt or something, right? So yeah, that's something that that Shift 4 does. And 5 years ago they had like nothing. Approximately 5 years ago, I can't remember when they made their first acquisition. When they made their first acquisition of a company that had a few sports teams, it
Mhm.
was a few years back. It was only very few, and now they have half of Major League Baseball. They have a decent amount of NFL teams, NBA teams. They even just signed the PGA Tour, the whole PGA Tour recently. So that just shows you how good they are at cross selling.
Go rapid fire here. Any
But
others that
yeah, yeah,
that pique your interest?
yeah, I would say similar to Shift 4, which is in the payments industry. I would say PayPal, and some people call it PainPal because it has done nothing for a while. In fact, it has dropped from $300 maybe in 21 approximately to where it is in the 60s today. I actually think that it's going to take 5 years for the market to kind of realize that a turnaround is happening. It's a big ship, and people are so
They got
pessimistic.
Venmo.
Yeah,
Yep.
they have Venmo, but the new CEO, Alex Chris, he's fantastic. He is he has reinvigorated the company from a decade of no innovation, no investments in R&D, and he is really doing something. But it's gonna take years. So by the way, all my picks, I always look at the long term. I don't go for short term stuff. It's always about the long term. So it's multi-year. So for example, in 2013, when I made Apple 25% of my portfolio, um, it took 5 years for Apple to triple. And so if in the first 5 years it did nothing, and then in year six, then it tripled. Clients from 2014 to 2018 were complaining that, hey, why are we invested in this and it's doing nothing? That's what I think is going to happen to PayPal. So there's a lot of pain for probably 4 years, but I think in year five it's going to do fantastic.
Cool. Any other? We'll just do rapid fire here, and then I have other questions and different things to talk about. But any other stocks that you really?
Yeah. So what? As you can tell, I love stuff when there's pessimism. So when I was buying Vital Farms and currently Shift 4 and currently PayPal, there's a lot of pessimism. In the last 4 weeks, there has been a lot of pessimism on AI related stuff. And one of the most common questions I get is there an AI bubble? The short answer is yeah. I think it's yes. But there's a lot of differences between what the dot-com bubble has done and where we are currently. And with the current pessimism recently in the last few weeks, I actually think Nvidia, even though it has gone gangbusters recently, I think that it is undervalued based on its future prospects. They had a phenomenal 3Q earnings report. Recently, they were just approved to sell chips to China, and yet the stock is down from like 190 to where it is in the 170s. I think that's just absolutely, misguided and full of worry in the short term. Given Nvidia's growth and given where its stock price is, it's undervalued. And people are so worried about AI that they are throwing the baby with the bathwater. And I do think there will be a lot of AI related companies that will go broke, especially the ones that are being invested by private equity and venture capitalists, I think a lot of those companies will go broke. Some public companies that are working on AI will not see the fruits, all the profits that they think that they're going to get. But I think that Nvidia will do well, at least for the next 2 years. And the caveat here is I have to make sure that over the next 2 years, that no competitor is going to eat into their market share in a big way.
For sure. I guess maybe just some other ones I'll throw out there for you. I know you mentioned maybe you're looking at some gold. I know gold and silver's been ridiculous. Silver, this is a weekly chart. All these are weekly charts, by the way. Silver's up 40% since the end of October, 35 trading days. Gold is on the verge of its all-time highs. Any thoughts here?
Yeah, so this is a question I get a lot. Should we, what do you think about gold? And I actually just got this question. I had a meeting with a client on Sunday, and the answer to this is that in the short term, definitely there is a lot of potential for gold to continue running. But because my view is that if most people are trying to optimize for the short term, then you need a lot of informational, analytical advantages in order to beat them. It's like a poker game. We're talking about poker, right? So in a poker game, you need to find your edge. And in terms of gold and silver, I personally don't have that edge. My edge is my ability to think longer term, and also to buy when everyone's panicking, and to be conservative when everybody's excited. So for me, for gold personally, I would not invest that for clients at these prices because it's already run up. So in other words, the easy money has been made. And when we look through history, asset classes have a tendency to earn what they have done over the long term. So in other words, if stocks do more than a 20% return for a period of time, there will be a period of time where they will earn nothing. So as an example, the S&P earned nothing from 1999 to 2011, the S&P 500. Microsoft in 1999, you wouldn't have made money until 2014. And I think the same thing is true with gold. I think that at current levels, it's going to return to its longer term average return of 3% approximately per year. So I think, like I said, the easy money's done. I wouldn't chase it here.
Any thoughts on cryptocurrencies?
Yes. So I get a lot of these questions as well. And so
I guess with the, maybe one of my questions too, when it comes to silver, gold, Bitcoin, I wouldn't say there's no fundamentals, but it's not like looking at, systems for where you could see, here's the earnings, here's kind of what I think, kind of what's your approach, but also what's your outlook for these type of assets.
Yeah. So like you said, there's no way to calculate intrinsic value because they don't produce income. But the big difference between gold and even if you include paintings with cryptocurrency is that gold and paintings have experienced very large market corrections in the past already. So in 2008, gold was there. In the year 2000, 2002, gold and paintings, they were there and they survived and they thrived. The thing with cryptocurrency, especially, for the most part, it's really only become popular several years post 2008. So there is it has not experienced a real test yet. And what we have seen so far is that there seems to be a correlation with overall enthusiasm in more high-flying investments with cryptocurrency. So as an example, when the market was going up, cryptocurrencies have been going up. When the market was going down, crypto was also going down. And recently with the AI kind of worries, crypto has also been going down. So there has been a correlation with that. Whereas gold, at least, it has had a history of holding its value or not growing or growing when the market has problems. But crypto has had no track record of being able to hold its value in a 2008 type of correction. And for perspective, 2020, it was an external factor that caused the stock market to drop 30%. And I was telling people that before COVID, stock prices were so high that even though it was down 30% in a month, that's not your full correction. It was only like half a correction. So cryptocurrency hasn't been actually tested. And are you familiar with Kalshi at all?
Yeah, for sure.
So,
Prediction
yeah,
markets.
yeah. So prediction markets. So on prediction markets, I actually made bets against, Bitcoin. And so far I'm way, way in the green on that because of the AI scare. Yeah. So I definitely think that it's, uh, it's extremely risky. It's extremely speculative, and I'd rather do gold.
Absolutely. Any other any sectors in particular that excite?
Yeah. So one sector that really excites me, and I only have one investment in it, it is the energy sector. It's kind of energy related. So we talked about Nvidia. The good thing about Nvidia is that even if whoever wins the AI software race, right? As long as they buy Nvidia chips, it doesn't matter who wins. But you know what? With the energy sector, that's where the bottleneck of this whole AI revolution is. There are many data centers that are being built but cannot be powered. And that is where the real stability of demand will come from the future. And so I invested in this company called GE Vernova in about a year and a half ago when it spun off from GE. My clients and I, we invested at 180 something, and it's trading at about 680 recently. And I think there's still further upside to it. And the reason for that, it's again not my top idea, okay, but I do
Yeah.
think there's still upside, for the long term for it. And the reason for that is that if you're an investor in GE Vernova, you don't care not only about who wins the AI software race, but you also don't care which chip is being used. So it's like double protection from competitive factors. And their multi-year outlook was just raised recently in a very significant way. And this is going to be a high growth company for many years to come. So buying it at this price over the long term will make you. I've researched these stocks a very, very long time. So and I think that they are going to do well overall in the next several years.
Yeah. No, I like it. I like it a lot. I'm definitely definitely gave me some interesting picks to look into. Um, these other ones I could skip. Anything else that you want to cover that we really have went over today?
I would just say that one of the most important things that when you hire an investment manager is someone who has skin in the game. And hiring someone who isn't invested the same way as you or doesn't eat their own cooking is kind of like an indication of how vested they are in your interests. So, like I said, I invest 100% of my net worth the same way as my clients. So that's what separates me from other financial advisors, is that my primary priority is to make sure my investments do well, because if they do well, I make money, my clients make money, and everybody's happy, versus a salesperson where they just sell you something. They don't care what happens to your investment. They already made the commission.
100%. I
Yeah.
like that. You got to put your money where your mouth is.
Yeah. Yeah.
Cool. Anything you're looking forward to as we head into the end of the year?
The end of the year,
Personal or stock wise?
well, usually the stock market's, pretty quiet. I would say that my girls have been super busy with work. Their speech and debate, activities have kept them crazy busy. As you can see behind me, I've got some board games behind me, aside from Warren Buffett on the other side. So those are my two passions in life: investing in board games. And with my daughters being tied up in schoolwork, I haven't been able to play games with them. So now during the Christmas break, I really look forward to playing games with them.
There you go. You spend some time with the family during the holidays.
Yes, absolutely. Absolutely.
Awesome. Well, Earl, this has been a lot of fun. Really appreciate you sharing your background, sharing all your knowledge, and giving us some great stock picks here. where could people go to connect with you and learn more about WealthArch?
Yes. So they can go to mywealtharch.com/altfunds. So let me just spell that really quick. It's mywealtharch.com/altfunds. So mywealtharch.com/altfunds. And Mike, thank you so much. This has been a wonderful conversation. Hopefully your listeners will be able to take away some good investments from those that I shared.
Absolutely. Thank you so much, Earl. We'll make sure to include all that in the show notes. And thanks so much for joining us.